Here we go. We got the live stream going here with Forex-trading-unlocked.com. I want to thank everyone for joining us today. Before we get into this webinar, I just want to show you our disclaimer real quick to remind you that this is for illustrative and educational purposes only. For those of you on Discord, you're probably not seeing our Discord or seeing the disclaimer. I'm not sure if you are or not, but we have the tab on our website you can take a look at there, and that has it there. So just reminding you that everything we are talking about is here for educational purposes only. And if you haven't done so already, please make sure you subscribe to our YouTube and Twitch channel, Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. And with that, we're going to get to our live screen. I think you can see me now here for those of you on Twitch also. Okay, all right, Gary B, we are getting through our analysis here. All right, so as we have everything pulled up here, we have the Forex-trading-unlocked.com website pulled up, and from our market tab up here, we already have the workstation tab pulled up. And let's see what we have going on as far as our dates going on. So the 23rd, we don't have, let's see, for Germany, a couple numbers, a little auction in the US. We have a little bit of nothing really going on, and even in Asia. So let's see, for Tuesday, we do have chain store sales for the yen. That could be something that could spark a little something. We have an S&P Global Comp Flash PMI for the EU as well as Germany. Those could be those could definitely shake up the euro, and then we have the same thing for the British pound going on, also their PMI. So that's going to be something that's for sure going to act on those currencies. For the Canadian dollar, the business barometer, medium number, that may do some things. Building permits in the U.S. and new home sales, those are numbers sure to be looked at. We'll see how they what they do to the market. Then we have on the 25th, we have leading indicators revised for Japan. For that will impact the yen. I would definitely take a look at that if you can. If you're a yen trader, you should definitely pay attention to that. Consumer sentiment in Germany definitely is going to be a big number for the EU and for the euro. And then let's see, we have some more auctions going on. Then we get to the 26th, we have retail sales coming up. Let's see, PMI, these are in lesser currencies. GDP, that's something for the US. That's something you're going to have to take definitely be paying attention to. Then we have another auctions. Yeah, okay, we have, well, we do have some numbers for the yen, though, also coming out. And then we have Friday the 27th. Remember, we are in front of a holiday market. We have a 3-day weekend coming up. So, and let's see. So, yeah, Friday we have Michigan sentiment for the U.S. That'll be something to pay attention to. But remember, it's holiday markets. Monday, the markets are closed in the U.S., and Friday, you know that people will be leaving early. It'll be a very quiet trade. So probably most of the trading in the U.S. will subside into Thursday afternoon's trading. All right, we have the Euro-US dollar chart pulled up here. Why don't you take a look at this for a little bit here? All right, so what does this show us here? We have some very interesting things going on. You can see that last week the euro had gained strength versus the dollar. It's something that has been a little bit of a surprise to some. However, when you look at with the bounce in the interest rates, which we're going to take a look at those also, that'll give you one of the reasons why we've had this little pullback in the dollar index. In fact, that's where we're going to start right now. So we're going to go to Dixie and take a look at that. Now, if you look at that, it looks a lot like an inverted euro chart, doesn't it? Well, that's because the euro, remember, is the number one currency in the dollar index. So the dollar index, if you look at it, it's coming off of higher move highs. It has not set a lower move low yet. So it'll be key to see if this low that was set on May 5th, towards the beginning of the month, if it will hold. So we have been making higher move highs and higher move lows. So that is indicative of what? That is indicative of a bullish trend. So we have to be mindful of that. So let's take a look at the, if we look at this, the steepness of this trend is actually not too bad for the dollar index, and that's something I would be really paying attention to as we move forward as far as the strength of maintaining this bull market of the dollar. Now, is the dollar really that strong versus the basket of currencies out there, especially the majors? Well, to some degree, yes, and to some degree, no. I would be more reluctant to say that it's not the other currencies that are just being weak and that the dollar is very strong in this environment. I would say that it is more that all the currencies and economies around the globe are weakening. The question is that when you look at momentum, where does it really fall on the most? It's on your lesser countries. The United States is the biggest economy out there. It's strongest as far as the business structure and capital. That's why it is the top currency right now globally. If the cryptocurrencies were the true flight to quality, inflation protector, what have you, those markets wouldn't be collapsing just like these other currencies are versus the dollar. So dollar weakness really is there. And it's not that there's a real strong dollar bull there. It's just that all these other currencies are that weak. So please, if you're on YouTube and Twitch, don't forget to, if you haven't subscribed already, subscribe to our channel. Also like and share this broadcast and ask any questions on the chat room. Also, if you want to get engaged here with this video that we're doing, don't be shy. Please leave a question or two in our chat room. Okay, so we have some people here on, let's see, on YouTube and on Twitch and also on Discord. All right, so let's get into more of this analysis. So the dollar index, it has had a little bounce on Friday, and the question is this little correction over? Now remember, this current pullback that we are experiencing in the dollar index is exactly just that. It is a correction. This market has been rallying for months, days, weeks, and everything in between except for the last week and a half, in which case obviously we've been trending lower. And so we'll look at this as one, for sure, a downside correction. We do have a short-term potential buy signal forming here. This little harami formation here, this little kind of small body of a range here and tight range day that we had on Friday, that's called a harami buy. Now, that doesn't mean necessarily that this is very bullish for the market. We're not expecting a big rally to the upside over the next couple days. But with this signal, it typically means that the prior day's low should hold for at least a couple of sessions. Now, that doesn't mean that tonight or Sunday night when the market's open, or even Monday, that we don't fall through this and make new lows. It's very possible. Anything can happen. But right now, it definitely has a short-term consolidation picture possibly forming up, meaning that we may go sideways. It may just bobble on support a little bit, maybe play with it. But the key is, one, the low from Thursday as well as the low here back on May 5th. If we take out this low here, that just means we're extending the correction. It doesn't mean we're bearish the dollar. Remember, all currencies are weak right now with our interest rate outlook, which we're going to check at right now. So when you go to forex-trading-unlock.com, if you go to the markets tab and you go to futures, you will pull up a page that has the US 30-year as an option. And when you pull up that, hit that tab, then you get the US 30-year Treasury bond chart that will be available to you. Now remember, futures are always in delay, unlike our Forex markets, which we can broadcast and have a live feed on our website where you don't have to log in. You have access to these charts, live quotes right away, fully functional. For the futures, it is in delay because that by law is the way it has to be when it comes to futures data. If you're not paying for it, you cannot have it in real time. So that's just the way it is. So anyhow, we had a little breakout to the upside over the past couple sessions in the 30-year Treasury bond. We also have a inverse head and shoulders. You have a shoulder here, you have a head here, and a shoulder here from Wednesday's session. We took out the neckline on Thursday, settling above it on Thursday and Friday. We are targeting on an extreme basis from this current slide that we have had in the 30-year Treasury bond, the 147.21 up to 150.21 handle. Are we going to get that high? I don't know about that. That's a little rough with our Federal Reserve's banking policy right now on really jamming higher rates down the market's throat. Now that doesn't mean that under the current environment that they may start to slow, because we know that inflation is here. There's a lot of problems going on, and as far as with the market, the way it's swinging around too, the Fed has to reevaluate its position before it maintains this current trend of raising interest rates. I think the trend to raise rates will continue. However, the speak will start to include more of a review of things that are now definitely obvious, as far as like especially inflation. Remember, 6 months ago they were saying, oh, inflation's only going to be a short-term blip, blah blah blah, and now it's Putin's fault. Well, it doesn't matter whose fault it is. We know this all began with the lockdowns and everything that's been done over the past 2 years, and especially what's going on with the oil industry. This is killing the economy. So, and the higher interest rates are also a factor that's driving the strength in the dollar. So as this trend goes lower here, rates go higher. In fact, let's go back to the dollar index here. So if we go back and look at how February, this market has been trending higher and higher and higher and higher. Okay, we go back to February into March, we peaked out here. So February we did have a little bit of a bounce here, and then boom, we peaked, but we were already coming down. This market's been trending lower, okay? So this has been going lower, rates are going higher, strength in the dollar. That's where that came from last year, and has been perpetuated. This last leg down is a very significant one, because this is when we started to really see the Fed really juice the rates. Before that, they were threatening to do it. Then it now has become a true reality. And also, the original consensus going into the beginning of the year, when we were back here at the end of 2021 and the beginning of 2022, we were expecting at most a 1% to 1.5% raise on the discount rate by the Federal Reserve over the course of 12 months. Now we know it's at least 2%. Look at what they've already done so far this year. So these are driving factors that help to support the dollar. They lift that and give them strength fundamentally versus the other currencies. So, and then it gets back to oil. Now don't worry, we will be back on the FX markets here. So also when you hit your markets tab, you hit your commodity button, and that gives you options of all kinds of commodities. And when you hit the crude oil, you can get the crude oil chart. Now this is interesting. This market has been trending, making higher move highs and higher move lows over the past couple of weeks. It is right now looking like it's consolidating, but more now it looks like it wants to challenge resistance. If we take out the high from last week, that means a higher move high after a higher move low, locking in the bull trend. The only thing is, if we take out the high from last week, that means that we breached this 116 area, which has become resistance. Now we're shooting to go back up to 130. Now let's go back to our currencies. So as the 30-year Treasury market continues to rally, this market gets to have a little help on its correction. However, if oil breaks out to the upside and that bond rally falters, remember, this is where the bond rally is if you go back to here on a Fibonacci basis. If we come back to this last swing high here, which we haven't taken out, well, that's the question. Are we in the middle of an exhaustion rally? Or hey, let's even go back to right here. That already puts us at the 50% mark. That already puts us where we can be coming into this zone for a spike in this week, challenge this high, make it look like, I mean, this is a head and shoulders here, this reverse head and shoulders. If this is the case and this signal is strong, we should be able to propel up to this area up here. However, momentum is so fierce fundamentally against this rally that odds are we're going to have a lot of trouble getting just through this 144.12. If we see 144.12 get breached, then you will see most likely the euro travel up to this, back up to this $1.07 area, $1.0869. But this is it, folks. This will be the extension because the interest rates are going that way. As they pull back, meaning interest rates are going, the interest rate chart is going up, rallying the market, the price is going up. That means rates are going down short term by the market rate. So, and that means that gives a little weakness to the US dollar, gives strength to the currency crosses against it for the short term. So be careful right now selling into this rally. I would wait for it to get a little bit higher. Now, if the bonds turn around and they start selling off in a big way, which means they fail and start to go up in price in the market, and if oil really breaches 116, well, then you're going to have a trouble with this euro getting up to 107, 108. So let's check real quick and see if we have any questions on YouTube. No, we got a couple viewers out there, but no questions. A couple viewers on Twitch, no questions. All right, well, now we're going to get to the British pound, guys. All right, so British pound US dollar has the same interest rate factor going on. Obviously, you can see it looks very similar to the euro. This one here, the question is, can we get all the way up here? I think that you are more likely to see the pound get back up to this $1.2730, even a $1.2865 area over the next week to week and a half. Then you're more likely to see that strong of a rally here than you are in the euro, especially with oil going higher. With oil going higher, it's going to make the euro less likely to or suppress any type of bullish momentum, because remember, the EU doesn't have energy commodities. The UK does. So if the interest rate rally continues in the bond market, then that kind of cancels out with the oil if the oil market continues to rally. So that would give a chance where if the interest rates are rallying, meaning going down in market price, and oil is rallying as well, that helps to support the British pound. We could see a spike up to this 127.30, 128 area, but remember, this market is trending lower. I would use a lot of caution when it comes to trying to breach this trend. So as you can see, this really sets us up to come into this trend, which we're sliding on a nice decay rate for the British pound US dollar. So for an overall longer term trend to be maintained, especially with the fundamental factors in place, this is something that is very likely to maintain itself. Now, if you have a very valid sell signal, that is a trend trade. So anytime you get that right now, start to act on it, watch your risk, and you know most likely the momentum will be in your favor. Especially, remember, if you see the bonds selling off, meaning going down in price, and meaning the market rate goes up, and especially if oil, also if that stays where it's at. Oil rallying kind of neutralizes the interest rate equation when it comes to the pound US dollar. And that's why with the dollar index, where the euro looks really reflective of it's an inverted chart of the dollar index, because it's the biggest component. All the other ones don't have to completely look like that. There's a divergence all the time, and this is one European currency. We'll see it. So let's look at the US dollar, Swissy here. All right, here we have a short-term buy signal setting up. Remember when we were talking about that Harami buy signal in that other chart? Well, this is the same type of thing. We have a Harami buy signal shaping up here. So this is something I want you to be mindful of. Does that mean that we're going to stop on a dime and all of a sudden start rallying really strongly up to make new highs for the US dollar Swiss? Well, I would use a little caution with that. For the US dollar Swiss. This one here for sure has had a lot of momentum to the upside. So you got to be very mindful of that. With markets go out like they come in. So when you look at this one here, let me get this. Yeah, I've just got something on. Got someone on the chat here. Just wanted to make a little reply. There we go. Okay. All right. There we go. Sorry about that, folks. All right. So markets tend to go out like they come in. So if you draw a line here, we have this short-term top in the market. Okay. Maybe I should make this line a little bit wider. Okay. There we go. So we had this extreme rally. Well, why wouldn't we have an extreme correction, at least in the short run? So we have a short-term buy signal lining up. Now, this is from this big low to this high, this last major swing low to this last major swing high of the bullish trend. We have the 50% 0.618 area. I don't know if we have the ability to get down here. If the only way I see this happening is if oil doesn't rally right now and holds where it's at, or even goes lower over the next couple sessions, and simultaneously you see the 30-year Treasury bond and the 10-year notes continue to go up in price, rallying higher, making higher move highs. If that happens, you have a short-term chance of seeing the US dollar Swiss slide into this area here. Now, we just came up to parity, we bobbled around, and now we're selling off. This is profit taking. The fundamentals have not changed when it comes to this whole situation right now. You got to be mindful of that, folks. If any of you have any questions about what we're talking about right now, this whole interest rate equation is so huge right now when it comes to these currencies. Okay, now what's you have to also be paying attention to is what's going on with our president right now. He's over in Japan. Being in Japan right now is a big deal as far as what's going on with the U.S. and our trade relations, obviously. But the currency also could move in a big way. We already know that Japan tried to coax our ambassador to have the U.S. somewhat obligate themselves to helping Japan support their currency. This is a double-edged sword. If we were not in the current environment with rapid inflation in our country as well as around the world, and with the whole, you have all the collateral damage from the lockdowns, not to mention the mandates, and now you have this war going on in the Ukraine that is not ending anytime soon. These things all impact what's going on as far as strength for the U.S. dollar and what that we can do. If the U.S. agrees to help Japan to defend their currency, well, that means that we're not defending ours. And the only way that we can defend the Japanese currency would be by selling dollars and buying yen, which we could only do in the short run, and the only way we can do that is by taking on more debt. So we'd have to take more debt on in an inflationary environment to help support a foreign currency that it's not something that right now you're going to be able to sell even politically to your own side, because it's suicide going on and going right in front of the midterm elections, for one, and it's economically stupid also to do as well, especially under the current environment what the U.S. is in. So if we were to do that, and then also you got to remember is that Japan doesn't have the inflation we do. Of all the countries out there, actually, Japan's inflation is not really that bad. Most people aren't aware of that, but you got to realize that they're not subject to a lot of the imports that other countries rely on that don't produce their own food. Japan gets a lot of its food from the ocean, for one. They also produce agriculturally a lot of their own mainstay staples. So that being something that they don't have to worry about, it's just the energy costs. Energy costs, obviously, they don't produce oil. Oil is a big deal. So for production and all kinds of other things, yes, that causes inflation. But as far as food inflation and things like that, and even transportation internally, it's not so bad. And that's something where their economy, although it is hurting because of what's going on in the current environment, as far as globally, they at home and the local issue are having a little better time than especially like places like the United States, let alone, or even Australia or all these other countries that are definitely in a lot of trouble. I mean, look what's going on, is what's going to happen in Africa due to what's the war in the Ukraine. Global food production is going down. This is going to be a big deal. So anyhow, that's going to support this market, and we should see a big rally here occur very, very soon. So be mindful of these sell-offs and take into account that we have all your technical indicators now. They're overbought and oversold tremendously. Now with these little corrections, you're starting to see, hey, the indicator's kicking in the gear. We're back to normal trading. We can use our technical indicators. Not so much. Be very cautious of that. The longer term trends here are just beginning to shake the markets up. You will be very shocked when you see where they're at in 6 to 8 months, let alone a year from now. Oil hitting 150 is definitely something we've been talking about for months, and it is a very, very, very reachable target now by the end of the summer, especially we breach this 116. These are things that will pop this U.S. dollar Swiss back above parity, and because of Swiss lack of neutrality now, you may see the U.S. dollar Swiss all the way up at $1.20 in the not too distant future, which is very, very interesting to see how that works, because the European currencies are collapsing versus the dollar at a rapid rate. No one's talking about that in the news. This is a very, very big deal, especially for the Swiss. It used to be a flight to quality currency. So lots of opportunities for the trend, buy the dips, and look for big rallies to follow, that's for sure. AUD, USD, we're going to take a look at that before we get to the yen. Remember how we said these are other markets, they have an extreme corrective level to get to. Well, Australian dollar, US dollar, this is already pierced into our 50% to 0.618 Fibonacci area. It's having troubles, it's struggling. This will probably be the first currency to start to turn. I would expect the Asian currencies to turn first and then have the Europeans follow afterwards as this corrective move against the dollar subsides. Dollar strength comes back into play, and all these other markets start to head towards at least testing the lows versus the dollar. I would expect that the dollar index right now, it's flirting with support, has a good chance of turning around again and making a run at resistance for a rally. I don't think the high is in for the dollar index. Short term, obviously it is. We're talking about a weekly basis, so Australian dollar, US dollar, I think your extreme price action here is going to be around 70.98. That this will cap the current rally in place. We had a nice buy signal. This goes right into where we're at. This is a counter trend trade. It's hit our target area already. So I would say that if you were long this market, definitely tighten up your stops, and I would be mindful of the lows from the past couple of sessions. If we fall below 69.49, look out below. You're coming off a lower move high after a lower move low. What trend is your friend? That's going lower. You're on the wrong side if you're long. That's just the way it is. So if you're already long right now at the current pricing, be mindful of this area. You're most likely, if you fail from here, going to take a big dip lower. Things in Australia are not going well, or in New Zealand. That part of the world, where they are first world countries, they are now falling back into the third world rankings as far as many things. I would be very leery of what's going on as far as promoting any type of strength in the Australian dollar in the news or their economy, because it's falling apart at the seams. It's just the case. The mandates that are over there that have been imposed and maintained, let alone what's going on between them and China and being able to export commodity pricings and get things off the ground, they're falling apart. Their economic system is collapsing. They can't afford to maintain a lot of the social programs that they had in place, that they've expanded, and they're having issues. They really are. And I would expect that you're going to see a lot of turmoil there growing over the next probably 6 to 8 months going into the 2023, and it's not looking good. And if I am correct in that case, on a geopolitical level, the strength of the Australian dollar is probably going to be very weak. So I would expect the bear trend to continue. Now, short run, if we can have some sort of if the commodity run continues to go higher, especially oil and a bunch of hard resources, that could give some lift to the Australian dollar, but their central bank would have to really be aggressive with raising rates and have to start going like 1% at a time to jump in front of the U.S. Fed. That could cause a rally, but until you hear news like that and something like that occur, I'm going to have to go with we're not going to have not much of strength going on in this market. Bearishness is the case. All right, U.S. dollar JPY. So of the Asian currencies in that trading zone, they've been getting beaten up as well. We've had a little bit of a consolidation pattern here. If we correct back to 126.34, 125.13 area in here, this is the extreme of any correction I see. Unless you were to see oil get a major correction lower, oil would have to get below 100. It would have to be back in the lower 90s, actually get, to even spark such a sell-off, or you would have to have a bond rally in the United States that was just enormous, and there is nothing remotely that's going to fuel that. That's unless the Fed changes their policy and starts to cut rates, you're not going to see that happen. I mean, that could theoretically happen, but I don't believe that we're going to be seeing anything like that remotely in the short-term future. So downside here is the limit that we're looking for. Outside of that, we're looking for a bounce. Remember that President Biden is over in Japan right now, stumbling through a conversation about God knows what, because there's really nothing we can do for them. We've killed our oil industry in the United States, so what are we going to do? Take more of our own oil away from our own people to give to Japan? We're not doing that. So that's not going to happen. We're not going to turn the pumps back on. We're not going to open the XL pipeline. We're not doing that's not happening. So unless that happens, the oil factor is going to be really crushing the Japanese dollar versus the Japanese yen versus the U.S. dollar. Then there's the interest rate equation. The Japanese said they were going to defend their currency once it hit $1.30. Well, it hit $1.30. It's pulled back, but this is profit taking as far as I'm concerned. We're still coming off higher move highs and higher move lows. We're in a short-term correction that's been in place for only 2 weeks, and it's not much of a correction at that when you see the strength of this market. I mean, you got to remember March 4th, which was just over 2 months ago, we were trading at 114. We're trading $13, $14 higher. I mean, 14, basis dollar for the currency. That's a huge move without any central bank action on their part or having any economic issues where that would really be caught, that would be created by them. So their weakness is just because of dollar strength, interest rate stance of our Fed versus their Bank of Japan, and the fact that oil continues to rally. These things support this trade. In fact, I talk to people all the time who are like, how do you trade this market versus that, or how do you, if you're not this kind of a trader? I'm like, well, one way to trade the U.S. interest rate markets as well as U.S. oil markets instead of trading the commodities, if you're not, because commodities, you have to know what you're doing. There's rollovers, you have to be careful with your margins, there's different spread, and then you have spreads that can blow up, that can change one leg of 1 month in whatever sector you're trading. And if you're not aware of how those things work, you really need to stay away from that. But you can trade those markets either through ETFs or indexes, but also through currencies. So in this case, if you are bullish U.S. interest rates and you are bullish oil, well, then you would be bullish the U.S. dollar yen. And on the long-term trade over the past year, that has helped to support this. So this is one way you can ride that trend. And it is definitely working right now. And you will notice that why did we had a profit-taking and pullback here? Well, let's see. We have profit-taking and pullback here in the U.S. interest rates. And we go back to oil. We've been basically trending sideways simultaneously. So if oil is going sideways and interest rates are going lower in the U.S., that means we have a correction here like we've had in the U.S. dollar yen. So I hope that this is making sense. If any of you want me to go over this again, or if you have any questions about it, please don't be afraid to ask on Twitch or on YouTube. Thanks again for the like. We got a couple more likes on YouTube. We appreciate it. Thank you very much for spreading that around. It's very important that you do so because we like to expand our audience, and the more our audience expands, the more we will be streaming. So, especially during the week, this is a precursor to the rest of the week ahead. All right, so we have the U.S. dollar yen here, and let's see, do we have on Discord? I still got Gary B here. Okay, so we still got somebody here. And then here, let me put this. There we go. You guys can get that video on Discord. All right, so we're talking about the U.S. dollar yen. Now, as far as upside, how far can this go? This is a tough one. When we had this first correction here where the market stopped and came back down here to make this last major swing low, this is when the Japanese said, we are going to defend our currency. If it hits 130, we are going to defend it. Well, now the Japanese Ministry of Finance still believes in defending their currency. However, the Bank of Japan decided that, well, one thing we're not doing is raising rates. We're going to maintain a 0.25% rate in the market and use unlimited buying power to keep that level at a 0.25% or lower. Well, if that's the case, instead of raising rates and you're actually locking in a floor or a ceiling, excuse me, as far as going up in rates for Japan at 0.25%, meaning you're buying everything in sight, so it cannot. There's a solid bid there. Well, it can bounce off that and go higher, meaning lower. Well, that's only going to weaken the yen. So, not to mention, if you're unlimited buying the debt market to maintain a low interest rate, how can you afford to maintain that? That means you're draining resources to artificially inflate or artificially keep your interest rates low for other reasons, for manufacturing, financing, whatever, within your own economy. There's all kinds of rationales why they would do it. And I know one of the reasons why they're not raising rates is because when you have an inflationary environment, you don't raise rates. You just don't. That's when you cut rates. So that's what you're supposed to do. But see, we're in a situation in the U.S. that you can't do it, and we're also in a race to really screw up the economy. That's very obvious by what the Fed's been doing for years. We should have been raising rates already 6-7 years ago. We shouldn't be where we're at right now. We should be at least 4-5% higher, so that in this inflationary environment, when we need help, when financing and things like that need to be done, and we have a little bit of relief for small businesses and the economy and retail sector, that's when you would be cutting rates and pulling back, which would help to ease the burden of pricing, because guess what? Everything gets more expensive as rates go up. It's just a fact. That's how it goes. So you can believe the news, which they've been saying, oh, this is how you cut inflation. Well, in a different environment, that can work. We're not in that environment. We're in a totally different thing. We're in the middle of hyperinflation and also way oversupply of money. So that's something that, hey, guess what? You remember how all those people were getting that free money and people said it was going to cause inflation? They were right. That's how inflation gets started, for one. So on top of all the mandates and lockdowns, which have created shortages, which creates even more inflation, you have the George Floyd massacres across the country that depleted all kinds of supplies and warehousing and destroyed all kinds of materials. While that created inflation, you destroyed everything. When you destroyed the supply, it's gone. You have to replace it. Well, you couldn't replace it because you had lockdowns and you closed down all the manufacturers, so there was nobody replacing those materials. That's why we're in the situation we're in. In Shanghai, this is also going to play into effect with the Japanese yen as well. Because guess what? If you don't know what's going on there, take a look at the map. It keeps growing with the number of container ships blocking out that port. And guess what? If those container ships are there and not moving to and from, that means that now there are all these extra container ships that shouldn't even remotely be near Shanghai. Months ago, they should have been gone in another part of the world, which means now those container ships, which go back and forth, bringing things back and forth, they got a one-way thing. So they got to be emptied first and then filled up, and all these other places are waiting to fill container ships that they don't even have. So that's another problem too. Is that going to end anytime soon? Absolutely not. So guess what? This trend is your friend. Stay with it, folks. Now here's a tough one. US dollar Canada. Talk about one that's been a crazy trade. Big sideways overall over the past basically half a year. But we've had a nice rally going on. Higher move highs and higher move lows. We had a bit of a bouncy trade on Friday, had a slightly positive day, but we made a lower move low after a lower move high, where you've been correcting lower in this upside trend. The question is the trend falling apart, or is this going to be maintained? Very tough question. I would say that we still have this $27.66 down to $26.95 as a support zone. This is our last line of defense as far as holding up this market. If we fail from $26.95, I think it's more of the same big chop down to test 125, 124 even. Overall, there's a lot of reasons to be more bearish the U.S. dollar Canada than bullish. I think the interest rate trade is really one of the biggest things supporting this thing right now. Then there's also the fact that for some reason we can't get along with Canada politically, and I don't understand. We have two communist leaders. They should be able to get along, but they're not. So somehow the Biden administration can't get along with Canada, but then Canada is also falling apart at the seams. One of the reasons why U.S. dollar Canada's strength may be coming into play is that we know that they have overspent their limit. Their debt level in Canada has exploded so much in just the past year, let alone through the pandemic, that it is totally unsustainable. It would be like, if you look at the U.S. debt, which is obviously hemorrhaging and ridiculously high, Canada has gone from where it was to already being at where we're at, or worse, relatively speaking, to them, where they don't have the ability to even remotely through their GDP support it. And that's where, remember how I said Australia is a first world country, it's now becoming a third world country. None of these countries are going to admit it, and most people aren't going to realize it until a half a year into it at least, that these countries are no longer that strong. Canada is on that way out too. There's a very good chance that if they maintain their policies that they've been doing, I mean, they're going to go the way of Venezuela. Venezuela collapsed, Australia is going to collapse, Canada is going to collapse. All these countries are going to collapse under these totalitarian mandates. You can't have government interfere with everything in the economy, everything in the business structure, and expect things to work. That's not free market capitalism. That's communism. So, and it also doesn't work. It means all of a sudden everything is shutting down. People aren't working, or people don't want to work. Because what's the point in working? You know, especially when, even if you can afford food, you can't get food because there is no food. So, and that's another thing we're coming to as well. And especially like if we do have such an issue with diesel, like they're saying it's going to happen, and especially with food prices, I would expect the U.S. dollar Canada to continue to rally. This is not what I originally had as a forecast for U.S. dollar Canada, but the more we're looking at these fundamentals, if this is true, that these dominoes are really in place, this is not conspiracy theory. This is the numbers. This is going off of their numbers and what's going on. This is not any type of right or left wing type of speak here. This is just the actual facts of what's going on. These are numbers. You can't go against that. Check it out. Their debt, their national debt, has exploded over the past 12 months, and it's not stopping. So, and then you have the way they treat their people, very similar to Australia. You can see the totalitarian grips that are coming as people can't go to work, aren't allowed to work, can't get this, can't get the things they need to run their businesses. You're going to have more strife, and that's probably going to cause strength in the U.S. dollar Canada, in which case then we can definitely say we're in a buy dip scenario. So we got to watch this. If you look, I know I've been dangling on this, but here, let's look at the monthly. Okay, now let's get rid of this so you can see better. All right, on the monthly, if we go back here, this market's been in a big range trade, basically. And if you go even here, for the past like 8 years, we've been trading between 120 and 140, with the bulk of the trading being between basically the lower 120s up to about 135. So this is the area here. So right now we've come off this major low. The trend looks like it wants to be kind of choppy and neutral. See, here's where we had support. This becomes resistance, but we broke out to the upside here on the monthly basis. Now we're a little bit lower on the month. We're still making higher move highs. Be mindful of that. If conditions really start to fall apart in Canada, we will see this market back up. This during this pandemic level here, when we had the spike at the beginning of the pandemic, we'll be back up here in no time. And if we start to have lockdowns because of COVID again, we're going from 128 where we're at right now, for sure back up to 145. We'll see a repeat and probably see pricing get even higher than that, because I think that trend is truly dissolving, or the strength in the Canadian dollar is truly dissolving over time, unless they get new leadership. Bitcoin looking pretty bad on the monthly there, ain't it? Let's see, we're going to end with a little cryptocurrencies. Double check. Okay, we still have Gary B on Discord. Thanks for hanging out with us, Gary B. Now that we're all new to Discord, which, by the way, folks, I don't know if you guys have anything. Let me see. Invite your friends. No, I can't do that. Let's see. How may I send a message? I did that. Okay. Copy the link. Okay, I got it. All right, for those of you that are on YouTube and Twitch, I am going to give you the link right here for Discord. All right, Forex Trading Unlocked Discord link. All right, so that's our Discord link. If you want to join us there, we're gonna be adding this to our stream. I don't know if this is actually synced properly, if the video is getting out on Discord or not, but maybe it is, maybe it isn't. Well, if Gary B, if you're still there, leave me a message, man. I know you left a nice comment there before, but if you've been watching the charts and been able to get this whole thing, please let me know, because I got no idea if we got this right this time. We had it right once and then we couldn't get it right again, so maybe we are, maybe we're not. So here on YouTube, I'm going to give it to you also. So for those of you that are on YouTube, here is our Discord link. Don't forget to sign up and join us there. All right, and let's see, we got you on Twitch. Okay, so we got you on Twitch, and we also got you on YouTube. Got you that link. Want to appreciate that. Oh, here we go. Got the answer. All right, cool. All right, so you are hearing me, Gary. Appreciate it. All right, and Juan is here. Juan is here too. All right, sweet. Okay, cool. Appreciate it. Thanks for joining in on Discord. You guys are great for starting to get our audience going. We were on Discord before once and things didn't work out, so we signed off, and now some of our friends at tfnn.com and some other places are like, you got to get on Discord, and I'm like, all right, okay, fine, we'll go back on it, see how this integrates and works. So, all right, so for those of you that are on Twitch there and YouTube, we have gone through the FX markets, all the majors. We'll go through a quick little wrap up with them again after we go through Bitcoin and a couple other cryptos. So Bitcoin getting a little bounce today. Is it bid? I don't know. I think this is just a matter of it's just chopping around. I wouldn't expect much out of it. You know, obviously the news that came out last week was more disheartening, and is probably one of the reasons that precipitated the sell-off in most of the cryptocurrencies. This is more news that is all more of the same. It's nothing new. It's to the crypto space, and it will happen again. So that is something that is there for sure. That's why you have to stick with the companies that are now somewhat regulated. I mean, you know, Coinbase is now a listed company. It's a real company. You know, at least legally it is. So there is a completely accountable and compliant, if you will. Well, what about cryptocurrencies is totally compliant? It kind of goes against the whole nature of things, which is not good, but it is what it is. But certain things are okay. The technology there is useful for many things, and many of the coins have value, have some technological value in them. Monero, for instance, has definitely a good value. Ethereum has a good value for its technology. Bitcoin, as far as a buy or a sell, well, right now, obviously, this thing is trending lower. Buying dips right now is not the thing to do. At least I would say I would be looking at other coins first to see when, if you want to trade Bitcoin, we're going to go look at Ethereum next and see if that'll give us a lead. Obviously, we have a little weekend rally going on, but this market has been under pressure a lot over the past few sessions. So let's look at the ETH US dollar. All right, so this one looks very similar to the Bitcoin, doesn't it? Is the dog wagging the tail or the tail wagging the dog? I would say that Ethereum is the thing that is wagging the dog. So watch out for Ethereum. If we can get Ethereum above 2166 here for a higher move high on the short-term basis, maybe this bearish or this current bullish correction, which is, this is a correction because the market's been trending lower, making lower move lows and lower move highs. That's a bear market, okay? Bear market. So right now this is in a potential bearish correction that may follow through to the upside. We'll see. If we can't get above 2166, well, we're chopping and grinding lower. I would be very mindful of this low that we set a week and a half ago down around $1,600, $1,700. How low can it go? Well, that's a very, very good question. Right now, they're all in a bear market. The news isn't looking very good. So I would expect, because every time you have this negative news that comes out about the cryptocurrencies, there's a big marketing blast to tell you how this technology is being embraced by mainstream business in America and the world and blah, blah, blah. So you're probably going to hear something about either Citibank or Chase or something like that embracing some crypto transaction based whatever for sales or what have you. I wouldn't doubt it that you're going to see something like that come into the marketplace and within the next few days all across the news. I could be wrong, but it seems to be that every time you have a big whack in the news, about a week later, and usually early in the week, someone comes out with this, oh, well, this new technology, blah, 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 now we're going to get back on the Bitcoin train. So for all we know, Elon Musk is going to jump in and buy another $1 billion worth of Dogecoin or something like that. Or Ethereum, who knows? Maybe they're going to start taking Ethereum as payment for Teslas or something, or SpaceX. Who knows? I don't know. But I would not doubt that something along those lines does come out over the next couple of sessions. All right, so we're looking for a breakout to the upside. How far can it go? Well, before you get too crazy, this is the level you really got to cross. 24, this 0.382, if we are still in a bear market and the momentum is very strong, you're going to have trouble crossing 2400. So a good little scalp would be if we break out above 2166, ride it up to 2400. I would say look for a 21 buy it at 2166, 2175, look to sell it out at 2400 in front of this marker. Could it go higher? Absolutely. I would look to take profits here though, because if this trend really is that bearish, this is about all we're going to see to the upside. Obviously, if we have a decent size bullish correction, we could get up more into this area here at 26.24 to 28.58, capping any real rally that manifests if this market is going to maintain a bear market, obviously. So, but right now with the current, let's put it this way, if I am right in my hypothetical example of new news coming out into the upside, positive, pat you on the back kind of stuff, then I think you will see the rally occur very quickly and also get above 2400 and have the ability to go up to 2600 or 2800. Excuse me, guys, I just have to send a text. Someone about the broadcast. Okay, so they're hearing on the YouTube a little bit twitchy. Okay, it's kind of funny. Twitch is working and YouTube's a little twitchy out there. So yeah, if you're on YouTube, also leave a comment if the audio or video is a little bit streaky or something, because I just got a text that it's not coming in very clear on the audio. I know the video you got to blow up it on a bigger screen a little bit, but otherwise the audio usually is not a problem. We got a couple likes, so I guess that's okay. Somebody's hearing us. So anyhow, back to Ethereum. So if we do get the new positive news, look for not only a breach of 2100, but a nice rally up to 2400. I would say at least nibble out if you're long, looking to take some profits again. Maybe nibble out around 2400. If there's positive news that propels it up here, then I would say we've got a better chance to get up to 2600, but 2858 I think is going to really cap this market, because you're going to really need a lot of push in marketing to get people buying these cryptocurrencies after the amount of fraud that's happened, especially recently. When you have a 98% drop in a coin's value within 2 sessions, that really starts to hit home. You got to remember that the bulk of the crypto universe isn't big companies. It's a few whales and a lot of little small retail players trying to get rich quick. There is no such thing, and that's a reality. And you can tell that there's a lot of people that are taking heed. Look at what we're looking at here. So we're looking at the old Doge US dollar. Look at how low this got. It got down to just at 6.5 cents. And I remember a year ago, it's so funny, a friend of mine who he has stayed out of the crypto space, but was talking about buying Dogecoin a year ago when it was around 45 cents, saying when it gets down to 30, I'm buying it, because that's the area where it gets support, and this thing is going to at least $1 or $2. Elon Musk is into it, and this is I can't get in the Bitcoin, it's too expensive, and this is the only way he's going to make a bunch of money. Well, so he loaded up in the 35 to 30 cent range, not doing so good at 1/5 the price right now, right? Or, well, a little bit more than a fifth the price now. We're at 8 cents. So, excuse me, little bit more than a quarter of the price that he paid for it. So I actually own some up around that area too, that I had taken in his payment and got rid of some, converted some into other coins, which actually those have gone up. So I have made money off of Dogecoin, but it was by taking it as payment and flipping out of most of it, because everything I've held obviously is not worth as much as it was. So in that case, I am not doing well. This market obviously is a bear market. I cannot say, and even remotely, that this is that to buy dips with this one. I mean, this is just eroding, you know. And even if you get a rally, I think that if you get a rally in the crypto space, your upside potential is what? I mean, maybe a few cents. So to scalp it here, I mean, I guess it's so cheap you can maybe get a penny or two rally out of this with the crypto space, gets a good spark. If Elon Musk comes back into the Doge space, if you will, maybe that will help spark a rally. But right now, I would be very leery of it. There's no reason to hang on to this technology. It's the technology itself is not valuable in the future. It doesn't have, at least as far as my understanding, any mainstream uses that can really be held long enough where you're going to say, hey, there's a future here for not just the next few months or years, but for decades to come. Quantum computing is going to change everything for all these crypto things anyhow. It's going to evaporate them all for the most part, except for a few that may be able to adapt into that environment. Ethereum maybe being one of them. So we'll see. But these lesser coins, it's becoming more and more obvious, I think, to most that there's nothing left here. Could you get a bounce? Yeah, but I think your breaks are worse than your rallies, and that's what you have to be mindful of. And maybe now, yeah, you can throw a little money at it, but if it takes out the lows here of 6.5 cents, I don't think it's coming back. Not unless you have some whale that comes in and says, I'm getting along this, and everyone's like, well, if he bought it, you know, and it runs it up a little bit, but what are the odds of that? I mean, that has to happen. Someone has to have that kind of disposable money they're willing to risk. Let's look at XMR US dollar. Let's look at the Monero. Now this one, once again, remember I said about technology having value, and this is where the Ethereum may break out to the upside, because Monero got beaten down because of the news, but it was able to handle last week much better than the rest of the crypto space, making higher move highs over this weekend. This technology here, and I've been saying this for a while, once it gets up to 280 to 350, you got to start to look to sell it, because 400 is probably the cap. But if you can buy it between 180 and 220, you're in a good deal. This got down to 120. It's right back up to 180. 180 to 220 is its fair value as far as technology. So there's a trade there, especially with this cryptocurrency, meaning that when it gets above, once again, 220, and it gets up to this 280, 300 mark, 400 especially, if it can get up to there, take profit on it, get out of it. You know, I mean, you can always hold a little bit, but that seems to be the range that it trades in. And the technology is viable, but the technology comes at a cost. If technology becomes very expensive, you no longer have that value anymore. The whole premise of technology is to make something faster, better, and cheaper than what was already in place. That is the whole premise of technology throughout human history, from the wheel to the rocket. You know, no matter what, it's all about making things better, faster, cheaper, easier. Period. That's it. Cryptocurrencies, if the technology doesn't make it better, doesn't make it faster, and definitely doesn't make it cheaper, well, what's the point? That's not good technology. That's bad technology. It's garbage. It has no way. And look at, as we're speaking, Monero is rallying. Am I making Monero rally? I don't think so. Maybe you guys are. The whales are coming out. You see that? How it's already coming into manifest right as we speak. No, I'm just kidding, folks. We know that it's not me. So it just happens to be going bid as we're talking. But the value is there. So versus Bitcoin, let's go back to that, BTC, US dollar, and you can see this progression. Look at this market is coming off of its lows. It's weak. It's not the leader of this sector, period. Just by looking at, I mean, we're looking at a small sample, but Ethereum, this is pretty much in the middle of the range. This one looks like it wants to break out to the upside. It has enough there that it looks like, oh, it wants to flirt with resistance, but it doesn't look strong. Not that strong. It looks stronger than Bitcoin. Looks like it's basing and looks like it might want to challenge that upside resistance to press this short-term correction to the upside. But then once again, then we look at something like Doge, where we know that this thing just has like nothing, no value. It's flat, it's thin, and it looks like a little pancake looking ready to flop off the plate onto the floor and test new lows again. Doesn't look strong. Technology, Dogecoin, not viable. Bitcoin, too expensive, and also the Ethereum network and everything works so much better, and so do so many other coins as far as on a technology basis. We also know that Bitcoin is running out. Soon there's already going to be a set amount, and that's it. That also adds to certain problems. So for store of value, blah, 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 Bitcoin will have that. Technology, not really going to work. Ethereum is where your money is at on that one. Doge, once again, technology useless, blah, blah, blah. This one's not there. Then we go back to common sense. Monero, why is it going up? Because, one, it's not as speculative as Dogecoin or some of the other ones, but it has technology like Ethereum that is adaptable, usable, and right now, cost effective. That is a big thing, especially in an inflationary environment. I don't know about you folks, but if you don't realize that inflation is going on and is an issue with everything right now, well, I don't know. You still have a little bit of waking up to do. But we do have that, as you can see, obviously, with Monero, where it had gotten beaten down like the rest. But look at also how it bounced. So this went from 120, actually, no, 115 up to 180. That's a big rally right there. I mean, if you look at it on a percentage basis, let's go from this high to this high. We've already had a 38% gain right there. Now let's go back to, let's go to Doge. And this is where you need to start to think about which coins you're going to trade. So I think you're going to really catch this right here. So this is not even a 20% correction on Doge. Not a big bounce there from what we're looking at. BTC, US dollar. We go from this to, once again, 23%. We're just above it. We're about 24%, but not the 38% correction. Now let's go to, and this shows you, as far as I would hope, a good example of which ones are good to trade. So here, we know that, well, this was off this high here. So let's bring it down to, oh wait, it was on this high. Okay, so this one here, also like Bitcoin, is just over, around, let's do a little bit more. This is about 24%, almost 25%. But the 0.3%, 38%, that's not there either. So as you can see, this is why you're not getting the value here, because the technology, this, well, it's just giving you, this is where value is. Value is much lower here on these cryptocurrencies than with the XMR US dollar. This one got beaten down, and we're going all the way up to here, and it's gotten a 30%. Now if we go, let's go down to the more recent correction here, like on the other ones, and then we're above 50% return. So as far as in the short run, your ability to make money when you look at these cryptocurrencies, it's not just the volatility, it's the viability. So something like Monero is a sleeper because it's not sexy, it's not in the news, but the technology is viable and it's there. This is one where when you take a big extreme like this, you can say, hey, look at the other ones, see how they're reacting. They don't break out that much to the upside, this or the downside. This is where you're going to get it. So something to keep into account when you're looking at your cryptocurrencies. We're going to go back to the Euro US dollar where we started out our webinar and show you once again that we have this nice correction going on here. We had our buy signal here that was a couple weeks ago, 3 inside up buy signal. We rallied up to this downward sloping resistance line, and we're still looking for a little bit of a continuation to the upside. So a little bit of dollar pressure maybe to start out the week, but remember to watch those bonds. If these continue to go higher, the dollar index should continue to test support a little bit. We're expecting a little bit of dollar weakness, and especially if crude oil can stay about where it's at. But now if crude oil breaks out to the upside, and if the treasury bonds all of a sudden start to fall to the downside, and especially if they take out this shoulder, they get below 137.31, folks, guess what? Dollar bulls are raging back, and then you're going to see this Euro US dollar falling down to new lows. So let's see, is there any questions on Twitch or on YouTube? No, but we got a couple more extra likes. We appreciate that, guys. On Discord, we got a couple comments. All right. Well, you guys have been absolutely fantastic today. I want to tell you that. We appreciate you spending time with us. We've been ran over just over an hour. So remember, for all your Forex trading information, come to forex-trading-unlocked.com. You can access these charts from the workstation and also from the market pages individually, already set up for you. You can work on them and make all your own analysis by yourself. You don't need to log in. We do have we got a first-time chat from one of our viewers on Twitch before we get off the air. How you doing? Appreciate the wave there. Thanks for showing up. And do you got any questions before we call it quits for today? Because if you do, we'll answer it. And if not, we just want to remind you that if you go to our market page here, and you go to products and resources here, you go to high probable Japanese candlestick patterns, and you can pull up a little information on the book that I wrote. It has a little video and also has a little copy of the book here where you can buy, share, and preview. We would appreciate it if you both buy, share, and preview. And also, you can always, from any of our pages on our website, you got this little section here. You can push on Twitter, LinkedIn, Facebook, etc. Email your friends. And from any of our pages, if you want to do it, like for instance, our book page here, I'll show you how we just go like this. You hit the Twitter thing, and shabam, it goes out just like that. Or you go back to where we were on our workstation page here. Now, it won't have the analysis here because if I want to do that, I got to do a picture thing and email it to you. But you can do everything that we did here live in real time. Obviously, markets are still closed today. And also, when you use our workstation page, don't forget to tweet that one out and share it with your friends as well. So we got another first-time chat from St. Port. Thanks, man. You are very welcome. We appreciate you viewing and your support as always. We will be having some other videos, obviously, coming up this week. We may even do one later on this evening. So you definitely, if you didn't catch this whole webinar today, make sure that you do check it out on YouTube or Twitch because they will have the copy of it. And once again, please subscribe to our Forex Trading Unlocked channel, YouTube or Twitch, and even on Discord. You got the link here in the chat box on YouTube and Twitch. And check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions so that you can learn how to trade different signals, and it works in all kinds of markets, Forex, futures, options, stocks, you name it. We have a couple webinars coming up for eoption.com for the summer. We're going to have some live interactive trading webinars where we actually interact with you, the viewer, and it's through the chat and enter stuff on the platform. And we have some Forex interactive webinars coming in as well. We're going to do that. So we have lots of good stuff planned for you guys, and we appreciate all your support and you sharing us with your friends in the Forex environment. So take care. I'm Teddy Keckstedt from Forex-Trading-